Good afternoon, everyone, and welcome to PBA at Noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. We are happy to finally be able to introduce to you Val-d'Or Mining Corporation, which trades under this ticker symbol Victor Zoro Zoro on the Venture Exchange. Val-d'Or is a junior natural resource issuer involved in the process of exploring and evaluating its mineral property assets, most of which are situated in the Abitibi Greenstone belt of northeastern Ontario and northwestern Quebec. The company focuses on the generation of new projects and early stage exploration, a sort of project generator. The mineral interests are broad and range from precious and base metals to industrial and energy minerals. Here to talk with us today is the CEO, Glenn Mullen. Glenn, whenever you're ready, go ahead, and we'll have questions for you. At the end, anybody wants to put in questions, just put them into the chat box or the Q&A box. Whenever you're ready, Glenn, go ahead. Thank you.
Thanks very much. Bonjour tout le monde. I should tell you right off the bat that anything that we present is also available en français, alors faites-moi signe. Today's presentation will be in English, and I'm very happy to introduce Val-d'Or Mining Corporation after a few false starts, including double quarantines over the month of January. And so I like to leave this disclaimer slide up longer than most of my peers do for the simple reason that it's a bit of a reminder to myself, not just to have information that's timely, but information that's accurate. And you should never be shy about holding us accountable for forward-looking statements and so on. Be that as it may, we're on to the story, which is project generation, certainly, but with a twist. Ultimately, our exit strategy is to create royalties. And how do we do that? Well, we create royalties in properties that we staked and owned 100% of, while minimizing dilution to our share capital by using creative joint ventures and option agreements. In other words, we're using other people's funding to explore our properties in order to prevent dilution to the share capital. And why would we want to be diluted when the major shareholders are the board, management, and key insiders? So we do focus on the Abitibi Greenstone belt, northwestern Quebec, northeastern Ontario, namely Timmins on the Ontario side, Matachewan, Kirkland Lake, through Rouyn-Noranda, Cadillac, Malartic, Val-d'Or, and Chibougamau. And Val-d'Or Mining Corp would have about 55 properties within that Abitibi Greenstone belt that are divided more or less half-half between gold and base metals projects, namely copper, zinc. So I've mentioned that we use arm's length joint ventures or option agreements as a means of exploring our properties and accessing a deeper pool of capital than we could otherwise do ourselves. And so I'll spend a few moments further on talking to you about the form of agreements and how we do that. But maybe it helps to situate Val-d'Or Mining Corp by taking a look back. So the principles of Val-d'Or Mining Corporation come from the companies that you see at the bottom of this image. Canadian Royalties, incorporated while I was in university in Montreal at Concordia, which back in those days had a Department of Earth Sciences, later merged with McGill, boo. In any event, Canadian Royalties was listed on the old TSE. It grew very quickly from a 15-cent IPO with Yorkton Securities back in the day, 1999, quickly grew to a $500 million market cap and was taken over by a Chinese metals company. Canadian Royalties is actually a producing nickel, copper, platinum group elements mine in Quebec, in the Nunavik region. And that was the original property that was staked back in our university days. And from that experience in business and lesson in business in many respects, we moved on to Golden Valley Mines. And Golden Valley was the parent corporation of Val-d'Or Mining Corp. Golden Valley being the English translation of Val-d'Or, where we're based, a mining town in northwestern Quebec, and Abitibi Royalties, which was the holder of a royalty in what has become the largest gold mine in North America, namely Canadian Malartic, which is only about 15 kilometers from where I'm sitting here in Val-d'Or. So those three companies, Abitibi Royalties, Golden Valley Mines, and Canadian Royalties, have each been subject of various forms of takeover transactions, and accretive ones for our shareholders. Canadian Royalties was ultimately sold for over $192 million back in the year 2010, and it IPO'd. Its original IPO was $150,000 on the old Alberta Stock Exchange, if anybody has a really good memory. Golden Valley itself was sold this past November for just under 172 million Canadian dollars in an all-share transaction with Gold Royalty Corp. And Abitibi Royalties was also taken over this past November as part of the same transaction with Gold Royalty for $336 million Canadian. And so those are pretty impressive numbers for our shareholders. In fact, Golden Valley and Abitibi alternated, switched places over several of the past 10 years as best performing public companies in Canada, all sectors, pharmaceuticals, cannabis, Bitcoin, cryptocurrencies, aeronautical, you name it, health sciences. Golden Valley and Abitibi were amongst the top 10 performers for most of those past 10 years. Abitibi was actually up over 4,000% from when it did its listing, IPO, in the year 2011, up to the takeover this past November when it was sold at over $24 a share. And Golden Valley also at over $11 a share. And so the same management group have now moved on to Val-d'Or Mining Corporation, given Val-d'Or was actually spun out of Golden Valley back in 2011. And that's how Golden Valley became the major shareholder of Val-d'Or Mining Corp, owning 38% of the issued equity. And of course, that position is now held by Gold Royalty Corp, GROY, on the New York Stock Exchange. So it was Gold Royalty Corp that took over Abitibi and Golden Valley, and therefore became the largest shareholder of Val-d'Or Mining Corp at the same time. And so what is Val-d'Or Mining Corp? What does it have, and what is it doing that make it worthy of your interest? You know, investors have a lot of choices. There are over 2,000 natural resource companies in Canada alone. If you add the Australians and the British companies listed on AIM and in the United States to that mix, it's closer to 3,000 natural resource companies. So what sets us apart? Well, part of it is certainly the business plan, the strategic plan. We're focused on minimizing dilution to our share capital, something very few of our peers champion. We also work in an established, very well-endowed domain in terms of mineral resources, in terms of infrastructure, in terms of supportive municipal and provincial governments, Quebec and Ontario, two of the best jurisdictions measured annually by the Fraser Institute. And within this prolific domain or domains, we hold over 50 properties covering both gold and base metals. So seen in a little greater detail, this would be the Quebec-Ontario portion of the Abitibi Greenstone Belt. You can see the interprovincial line more or less in the middle left of the page. All of the gold dots are, of course, gold properties that are 100% owned by Val-d'Or Mining Corp. And the green triangles complementing those would be base metals properties that are 100% owned by Val-d'Or Mining Corp. So what do we do that's different? We stake properties and own 100% of them on day one. Pretty much all of the peers do that. What sets us apart is what we do on day two and every day going forward once we've acquired these properties. We're not looking to raise copious amounts of money and spend it on exploration and then go do it again and again. That is dilution, the mother of all evil for public mining companies. And certainly many shareholders have no doubt been in unpleasant circumstances where they acquired a significant or healthy position on one day and very soon after that saw themselves aggressively diluted by management. We try to avoid that for the simple reason that we're major shareholders too. So day two begins with an earnest search for arm's length public companies who will become our partners and spend their money drilling our properties or trenching or the other high-end expensive exploration items. So typically Val-d'Or Mining Corp stakes the properties, does geophysical surveys, delineates drill targets, and then finds partners to finance the drilling of those targets. And we have a bunch of joint ventures that I'm proud to tell you about, all done in the past few years, 2 years, namely. The top one shown here is DUCROS on that property, which is a nickel, copper, platinum group elements property near Val-d'Or, about an hour to the northeast of here. We retain a 1.5% royalty, NSR, net smelter return or net smelter royalty, along with a very healthy position in shares, in equity, in the funding partner, who are called Quebec Nickel Corp, QNI. A second property shown on this image, the Powell Prospect, located in Powell Township, Matachewan, Ontario, a gold property that we've optioned to Spartan Resources. Spartan, who've recently completed their first drill program on a property originally staked by Sir Harry Oakes of Kirkland Lake fame. And on that property, we retain a 2% NSR. And finally, on this image, I'm showing a 1.5% NSR retained in the Luc Bourdon prospect, located in Ontario's Ring of Fire or McFold's Lake. So that's a copper zinc property. What I'm showing you here are 3 transactions on 3 mutually exclusive commodities, one a nickel venture, one a gold property, and the final one being a copper zinc VMS, volcanogenic massive sulfides property and target. And so the forms of transactions tend to be similar. We retain equity in the funding partners, we retain NSRs, royalties. That's what sets us apart. We stake a property, owning 100% of it. We aggressively seek joint venture partners who will then fund the exploration to prevent dilution to our share capital. And we retain shares in those funding partners. And I'm showing you the share quantities that we hold in 3 recent transactions. Juno Corporation, 1.5 million shares held by Val-d'Or Mining Corp. Progenitor Metals, 4.2 million shares held by Val-d'Or Mining Corp. And Quebec Nickel, where we hold 3.5 million shares of their equity. And so that also becomes a means of leverage, financial leverage, helps prevent dilution again to our share capital. Those shares can be disposed of as with any other shareholder, although typically we're long-term holders. As long as the company is working our properties and working in our space, we tend to be very long-term holders and have held many of those positions for more than 20 years in various entities in our group. So this is one property, an important one, because this is the center of what we anticipate being many of the catalysts over the next few months. So the DUCROS nickel, copper, platinum group elements property is about an hour northeast of Val-d'Or near Québec, Quebec. This is the program or the venture wherein we retain 3.5 million shares, which was 9.9% of Quebec Nickel when it went public. The part I'm pleased to share with you is that they actually raised over $7.5 million through 2021, most of which, all of which, is to be allocated to the DUCROS property. So our partner, Quebec Nickel, raised over $7.5 million, which will fund a 20,000 meter drill program, which is ongoing. It started a week ago. And so we're 4 holes into, 4 holes being about 400 meters of a 20,000 meter program. That is going to be a very important set of catalysts for Val-d'Or Mining Corp over the next many months, as assays are released to the public, as drill progress reports are received by the operator and shared with the partner, and we'll be very pleased to keep shareholders up to speed. This is the gold property near Matachewan, Ontario, where we optioned our interest to Spartan Resources, retaining a 2% NSR and receiving 1 million shares of Parton as part of the transaction. And this would be our copper zinc VMS property, located in Ontario's McFold's Lake, or Ring of Fire, pretty far north in the James Bay lowlands, and an area that was in the news for much of the early part of this year due to a tussle between 2 Australian behemoths, 2 large Australian base metals producers named Wheelu and BHP had a little bit of a tussle over an interest in this area, both companies trying to take over Noront Resources, another junior player in this environment. In any event, we like the geology in these areas. That's why we stake the properties. That's why we're committed to furthering exploration on these, and indeed all of our ventures. This is another early stage joint venture that we did about a year ago with a private company based in Vancouver called Progenitor Metals. In this one, similar form of transaction, we've received about 9.9% of the private company as it is intended to go public, retaining a 1.5% NSR. And this actually covers a cluster of 10 properties shown on this map, covering both copper zinc VMS targets, the green triangles, and several gold properties shown with the gold dots, all sprinkled between Rouyn-Noranda and Val-d'Or, more or less east-west along the Abitibi Greenstone belt. So here are where a few other things show a bit of difference or uniqueness to Val-d'Or Mining Corp, our capital structure. We've been around for 11 years and have just under 70 million shares issued and outstanding. Our burn rate has been nothing if not consistent, low, well managed. Major expenses on the corporate side include listings, legal, audit, and major expenses going into the ground in exploration, and also reflective of our shareholder demographics. So you can see that Gold Royalty, the company that acquired Golden Valley and Abitibi in November of this past year, Gold Royalty owned just over 37% of the issued shares in Val-d'Or Mining Corp. Board and management, SIDEX, and other Quebec institutions also hold increments of between 2% and 4% each. And friends and family holding a very significant portion, representing the lion's share of the 32% shown as other. So our market cap is in the range of $10 million, which means we have a lot of company on the venture exchange, companies that trade in the $10 million market cap range. So I invite you again to consider how our business plan is different, how we manage dilution very differently than most of our peers, and how the money that is received from our partners goes straight into the ground. So a few words about the management and board as we wind up. Other than myself, Jens Zinke, Dr. Jens Zinke, been working with for nearly 20 years, going all the way back to the origin of Canadian Royalties Inc., and then Golden Valley and Abitibi Royalties. Jens is actually a geophysicist PhD by trade, although he works mostly in the business development side and has a lot to do with some of the creative transactions that we've done over time. Rico De Vega, the CFO, Chief Financial Officer, Michael Rosatelli, VP Exploration, all very loyal employees, staff, consultants who've been working with us for a period of years. And on to our board of directors, all of whom, it's important to note, are shareholders. Luke Shuchuk, Deborah Honig from Adelaide Capital, Louis Doyle, former head of the Montreal Exchange, for those with good memories, along with myself and Jens, all being significant shareholders. So what do shareholders have to look forward to in 2022? Well, there's a number of exploration programs that are being deployed as we speak, or will be over the next coming months. In December 2021, we raised 400,000 flow-through dollars, not 4 million or 400 million, 400,000, of which 200,000 will be spent in Ontario and 200,000 to be spent in Quebec. Those funds are used to dress up the prospect generation side of our business, the grassroots properties, to delineate drill targets, immediately then seeking partners who will drill those targets using their funds. We spend minimal amounts of treasury funds drilling up or testing targets, getting them ready to be drilled by arm's length third parties. And again, the partner funded exploration is much more significant. So we're spending 400,000 from treasury. We have over $8 million being spent on our properties by our partners. $7.5 million coming from Quebec Nickel for a 20,000 meter program on the nickel property, DUCROS, and 4 million over 5 years, a new joint venture with Eldorado Gold, a major based in Val-d'Or at the Lamaque mine, and Eldorado will be spending their funds on 3 of Val-d'Or Mining Corp's properties over the next many months and hopefully extending over a 4-year program. Here I'm showing again that we're not just a gold proposition. We work in gold, we work in battery minerals, we work in copper and zinc. These are real properties, not just dots on maps. This is one of the gold properties near Matachewan, Ontario. We're in discussions with arm's length third parties, hoping to create a joint venture on this and several of the other properties. Another gold property north of Val-d'Or, and yet another one that's just north of Val-d'Or and Barrault, and that would be Michael Rosatelli on the lower right during one of our fall expeditions. And that's a property in the far north, in northern Quebec, Nunavik region, the very far north, near Saluit and Kangik-Sujuak in the Inuit part of northern Quebec, and one of our camps from PRGRAMS a few years ago. As I wind up, I'm very happy to leave the contact information on screen. Don't be shy to contact me either by email, call me directly anytime. We're based in Val-d'Or, Quebec. We've been here for over 35 years, and certainly very proud to be based in this small pro-mining community. So with that, Paul, I'll turn it back to your group and see if there's anything else I can tell you.
Thank you so much, Glenn. That was a great presentation. We do have quite a few questions. We'll start with John's question here. How many more partners do you expect to finalize per year?
Oh, that's a good one. It's hard to put an absolute number, but it's usually between a low number of 2 to 3 new partners per year to a high of about 10, one a month, more or less. That would be extremely aggressive. And that would be reflective of our best years, and 2 or 3 would be reflective of the worst years.
Okay. You recently announced a financing, $1 million financing. Do you want to touch on where you are with that and what the use of proceeds will be?
Yeah, so it is oversold. So it was announced on Friday, $1 million funding, hard dollars. It is oversold as of this morning. So we're working our way through the closing documents and the particulars right now. Definitely, we've had good support from our existing shareholders and shareholder demographics, including the board of directors and key management, and the Quebec institutions that have supported us the whole way through. So that I should have mentioned more about the Quebec government institutions. Caisse de dépôt, SIDEX, FTQ, they've all been very good shareholders of our companies going back 20 years. So I'm pleased to see they're supporting it again.
Phenomenal. So what would be the value of all the shares you hold on the market? I know you had that, I should have, if you want to share that screen or just answer that question.
Yeah, if I can figure out how to do that again. Let's see.
Sorry about that.
That's okay. I think it'll be this one. If our technology works. No?
Maybe if you go back on the slideshow. There we go.
Yep, just bear with me a second. There we go. So those are 3 examples. There are more than that because I'm not showing up the historic agreements, but these are ones that have been done in the last less than 2 years. One of them goes back more than a year, about 18 months. So not just over $2 million.
Okay.
So I guess that would be another way of looking at what dilution would Val-d'Or Mining Corp incur if it were to raise $2 million. So that's $2 million in equity we don't need to raise.
Yeah, exactly. Paul, I see you've joined us. Do you have 1 or 2 questions that you'd like to ask Glenn?
Glenn, with all the JVs, normally they're, like you have to pay a couple of $100,000 to get 30%, and then another couple of $100,000, whatever it is to get. Where do your projects stand right now? Are any close to being fully joint ventured? Are your partners almost there 100%? And do you give up 100% of your properties when they do happen like that?
Yeah, that's a good way to frame the question because there are 2 sides to it. So first of all, we don't do incremental vestings like most of the industry. Spend X dollars, get X percent. We don't do that. You have to spend 100% of the earn-in consideration to earn 100% of the property. And that's when we create and retain the royalty. So we try to make it easy for vesting, whereas most of our peers set the bar rather high. And it's normal that the partner will drop out after the 3rd, 4th, or 5th year because they can't afford the raise at the back end. We try to make it easy because we don't want the property back. We want the royalty. And if the results are positive and speak for themselves, like Canadian Malartic, like Canadian royalties, the nickel mine in the far north. The results drive the exploration and the funding. That's where the value is in the royalty. To have 100% of an empty envelope would be the other side of the coin, and we don't want that. So we deliberately make vestings easy, but only absolute. So the partner only acquires that interest after they've spent the last dollar in a joint venture. And the other half of the question, I think you said, do you take the dilution then in the property? Well, yes, we deliberately take the dilution in the property, but the dilution is from 100% interest in a grassroots property to a 2 or 3% NSR in something that's quite valuable. So apples to oranges, but that's how we convert grassroots project generation into NSR royalties. We do take the dilution in the properties, not in the capital structure.
Are you close to losing some of the properties through the plan has been like fully executed?
Juno Corp will certainly earn their interest in the Ring of Fire property. And I don't have any doubt that Quebec Nickel will. They had to spend over $1 million, something in that range, and they've raised $7.5 million, all of which is to be deployed on that DUCROS property. So they will certainly be fully vested as well.
Okay, and where are you working now? What properties are you working to try and develop a little bit before you put them out for JV?
Right, so those are some of the images I showed just by the conclusion of the presentation. Yep. Magoma Prospect, Oregon Prospect, Baden Prospect. 2 of them are north of Val-d'Or. 1 of them is in the Kirkland Lake, Matachewan area. All 3 are gold properties. They're ones we've cleaned up, dusted off, delineated the targets, done the ground, grid cutting, geophysics, sampling, have a number of good targets, and we're in discussions with prospective partners. We want someone to come in and commit to spend X million dollars over 2 or 3 years, exactly the type of transactions I've described, so that if they spend the entire amount, the vesting happens early and easy, and we're left with royalties.
Okay, could you just explain one thing you touched on? You have ownership of stock in all of your holdings. How do you actually get that through the initial process? Is that part of it?
It's part of the consideration. So they have to pay something for the work that's been done by Val-d'Or Mining Corp, or the previous grassroots exploration, the treasury expenditures that we've incurred. So rather than paying cash, most of them prefer to issue their equity.
Okay. Okay. So that's.
Sorry, Paul. We have another question here. How many public companies are you currently involved with?
Gold Royalty on the NYSE. I'm a director and consultant. And then Azimut Exploration from Montreal. I'm the chair. And then 3 others in our own group. We call it the ZZ group because our stock symbols all end in ZZ. So that would be Cleghorn, CZZ, Val-d'Or Mining Corp, VZZ, and International Prospect, IZZ, which works using the exact same business plan I've described, but only in Australia.
Oh, interesting.
Okay, now just a couple of more questions, and then we're going to wrap this up. You don't manage any of the JVs, like they're completely out in the hands of the people you give them to, so you're not getting any revenue back from them vis-a-vis being the driller or things of that nature.
Negative, the opposite, in fact. On Eldorado Gold, they're building and very busy building their local team in Quebec around the Lamaque Mine project. They acquired several of our Ontario projects with the expressed intent of using us as the operator to conduct the exploration. And so that would be on 2 properties formerly held by Golden Valley, now Gold Royalty, and then 2 properties that are owned by Val-d'Or Mining Corp. All of those properties are the same types of transactions I've described, where they have to spend all of the funds to have the vesting happen, which creates the royalty. But along the way, Val-d'Or Mining Corp is collecting operators' fees. It's in the range of 8% of the quantum spent, if I'm not mistaken. So that's on the Eldorado Gold one. On Quebec Nickel, they're actually using our office and our staff in Val-d'Or. So they're the earn-in partner, but they're paying for the infrastructure and various other services that are provided in-house. they're based in Vancouver and they're working here in Val-d'Or on that drill program. So there is some revenue from that as well. And typically we do the early stage grassroots and want the other side to become the operator. It's not lucrative enough at charging operators fees to justify that business as a standalone. On the other hand, sometimes it's complementary and it helps a partner get established and raise more funds.
Okay. So you're all obviously actively looking for projects all the time that you can bring under your umbrella and then re-put out to the market.
Yes.
Okay. I'm going to leave you with one final question, and it's like we'll hold you to nothing, Glenn. Gold right now is $1,902. What's it going to take, in your opinion, to get some more action on the small cap gold sector? Because I think if the gold stocks start to perk up a little bit, that'll drag along the rest of the commodity sector. And it's been very sluggish going through the first part of this year and late last year. So I guess my question is, what's your opinion on gold moving forward?
Right. Well, first of all, I'm a geologist, not an economist, so I don't have a crystal ball that's any better than anybody else's.
Then you've covered yourself good.
But that said, being an Irish Quebecer of long term, I certainly have a lot of opinions about things. So I'm never shy to share it. But, you know, these circumstances, COVID in particular, a pandemic, I mean, how can that not be good for precious metals over time as the world's financial systems are under acute duress, as the government has tried to save everybody from everything? It comes with a cost that most of us can't even quantify and don't dare to, because it's going to be shy by a decimal point, by columns in the billions. And so all of that is still out there. You know, it's not like Ukraine and Russia are getting along real well today. There's lots of global stress in the world. You know, in Africa, one of the continents we've worked in quite a bit, there's 54 countries. Compare that to North America, where there are 3 countries. 54 countries, 54 ways of looking at things, 54 languages, if not more. Tribal, religion, ethnic, commodities, you know, the borders are artificial. Conflict. It's always right around the corner. Gold has been a very good safe harbor from the beginning of time for conflict management. But we're not only in the precious metal space. All the commodities we're exploring for are attractively priced. You know, nickel is $11.55 US this morning. That's an extremely attractive price for nickel and nickel juniors. Copper is $4.55, $4.60 US this morning. That's as robust a price as we've seen during my lifetime. Zinc is $1.65 US. Uranium is $43.25. You know, these prices, each one of them on their own, are economic at these levels. If you can't make hay right now, get out of farming.
Gotcha. No, I understand. Anyway, Glenn, thank you so much for today. I'm glad we finally got you to present this
Look
webinar.
forward to meeting you. I used to come a lot more often because of the Montreal Canadiens, but I'm just glad the building's been closed this year.
Well, hey, we beat the Leafs last night.
I know, 3 in a row.
Yes. Here we go.
Oh, we're going to get a bunch of people drop off now from Toronto that are going to be mad at us.
Oh, Abs, go. Yeah. Anyway, it was very nice to do this, and I'll look forward to meeting you guys in person. So thanks very much.
Thanks,
I appreciate it very much, Glenn. Thanks to all who came on today, and we'll keep you posted on any new developments coming Val-d'Or's way. Appreciate it. Thanks very much, everyone. Take care. Bye.